So if you have followed some of the global developments, countries like the UK, the Australia, they have introduced something which is called the PE avoidance tax, or the diverted profit tax, where if the foreign companies are operating in that country, they are trying to see how they can garner more and more taxes from the fact that they are actually becoming source countries. Also, we have seen similar taxes being introduced by countries like Kuwait, which is actually alien to even taxation to a large extent, except for a tax on petroleum crude and real property tax. That countries have never seen taxes. So I think this is a very big shift in terms of how tax as a policy measure, and particularly to increase the fiscal means of revenues, is capturing the attention of most of the policymakers across the globe. The other interesting thing also was the one which was driven globally, was the whole OECD's project on base erosion and profit shifting. What has become quite evident across the globe is that multinational companies have the ability to organize their affairs in such a way that they actually can potentially pay the least amount of tax on an overall basis. And that is basically what is been addressed under the base erosion and profit shifting project. A lot of the proposals which will be delved into shortly by Naveen, one of my colleagues, have been inspired by BEPS. And BEPS as an agenda attracted a lot of attention by India. When India participated, part of the G20 was participating as part of the BEPS project, and they have contributed heavily. So at least 3 to 4 proposals which have been introduced in the current budget are inspired by the BEPS project of the OECD. Furthermore, I think if we look at the what are the policy objectives which actually have driven quite a bit of the amendments in the budget this time. One is lower corporate tax burden. Now this is a promise which was held out last year in the budget, that I'm going to reduce the tax rate from 30 to 25. We'll see what is the progress there. At least I do see that there is progress, even though we can have debate around whether it's adequate progress or not, but at least there is a directional progress in the right direction. Secondly, simplification of law. I think there were committees which have been constituted earlier. In the previous government, we had the Dr. Shom committee, which actually had given out the tax administrative and reforms report. We have shades of that coming into the law. At the same time, this time we had the Ishwar committee report, which has picked up some of the most mundane items which irritate us as taxpayers or almost on a day-to-day basis, and those have also been introduced in the law. So simplification of law itself as an agenda has been taken up, and in right earnest action has been taken. We might still have a judgment in terms of whether they should have done more. There's always a lot more to do. There can never be a finished agenda. There will always be an unfinished agenda for the next time. But directionally, again, the right things have been done. Bringing clarity in law. This is another bedrock on which this government has been saying that we'll bring clarity, we'll bring certainty. We are committed to having a non-litigious environment in tax. In fact, when the previous government actually set itself aside, what we were hearing globally was tax terrorism. First time in my history of so many years of practice, I've heard terrorism added to tax, and that is something which we've seen have going away, with active steps being taken by this government to ensure that litigation, controversy, and certainty and clarity in tax matters is given a topmost agenda from a policy standpoint. And I think businesses are worried. And when we are looking at FDI coming into the country, if we do not give, at least on these few tenets, on certainty, clarity, and non-litigation, non-controversy, if we are not able to test on that, we are going to have a big problem in attracting foreign direct investments. The other thing which is also enabling investments is basically also ease of doing business. And to a certain extent, I think there are a lot of proposals. In fact, Mr. Surana did allude to the proposal on, for additional new employment, what is the benefit? And these are one of them. So I think there are many more which are actually in the fine print, which actually gives some bit of a incentive and ease of doing business. So that, in broad terms, is what we are seeing as the areas where there's focus, and the focus has really been met with action in terms of proposals which have been introduced in the budget, and we'll see quite a bit more. One of the things which obviously is a bit of a dampener, but I don't think it should be a dampener, because when this whole idea of reducing corporate tax rates was announced last year, it was clearly with the added point that incentives will go away. And the government has been struggling over so many years saying that, while my headline tax rate is 33% or 32%, but when I look at my effective tax rate, which I'm collecting from corporate profits, is not coming more than 24%. So I said, what's the problem? The problem between 24 and 33% is basically the revenue foregone by virtue of incentives given. So the idea is that you reduce incentives. Incentives are also a big source of litigation. You will never find that litigation has always been attributed to an incentive. So if you claim an 80 benefit or a Chapter 6A benefit or an exemption under Section 10AA, any litigation is attached to it. Because when you try to take away what the revenue officials feel is the rightful due, then obviously there will be a give and take. There will be a problem, and that leads to litigation. So one of the added benefits of removing incentives is that you actually also reduce litigation. And if you have a lower tax rate, I'm sure that most of you are businessmen here, you will be very happy to pay low taxes. They're happy not to have incentives. One of the things which I personally feel also is a little bit of a more than a dampener is that R&D incentives. At one end, we are saying that we are going to give you a 10% rate for patents registered in India and for royalties which you get in. They are saying to say that you have more R&D in the country, you will have lower taxes for R&D which is exploited overseas. But at the same time, you're saying the R&D expenses which you will incur, generally R&D expenses are more like a flash. Those of us who play cards, flash you to play blind. You don't know. You spend money today, but whether that R&D is going to yield any benefits to you tomorrow, you really don't know. So industry really wants to have benefits with respect to R&D so that they can actually get they are incentivized to expend for R&D, but unfortunately that will also see a sunset by 2020. So there are various lobbies which will work to see that what incentives can be retained, but to my mind, if we have to have a low tax rate regime, incentives will have to go. And that's probably the paradigm shift we are seeing. Also, one of the other things in terms of the in terms of general principles, I would be very happy to hear Professor Rao and his talk on the economic the overall economic layout of the budget as the backdrop. But I think personally, don't think the government has much choices. The fiscal is under stress. The global is grim, and the global is grim. You need to really sustain yourself. And if you compare to what China did 20 years back, is that when China was rising, the rest of the world was with it in the race. So China rose in the backdrop of the rest of the world supporting its growth. Whereas out here we have a tough external sector, our exports are struggling. Obviously if you, Dr. Subramanian did talk about the fact that if you remove the oil exports, because we also do export quite a lot of oil, if you remove the oil exports, then probably you are not doing that bad, but we are still in the negative zone as far as exports are concerned. Imports obviously are balancing out because of crude, but if the crude goes negative, if the crude starts increasing, and we don't really have the benefit of the external sector, God help us. So honestly, we are in a bit of a tight spot, and we don't really have too much options. The government is doing the right thing in terms of having not much choices, trying to put the bets in the right place. Agriculture and the rural sector, the social sector, the education sector, infrastructure. We also have the trouble of dealing with inflation. And if we really make investments in the right infrastructure, which will probably not have inflationary impact on the economy, we are probably going to be ready to leapfrog into the next phase. And we'll have to wait for the right times globally as well. With those very few words, I'll end my talk here. Obviously, there's a lot more details which my colleagues will cover, and we'll wait to hear them. Thank you so much.